I am. Oh, shit. Don't I have to be up and open? Well, are we streaming or aren't we streaming? Video manager. There we go. And here we go. Did I get that right? Ew. That don't look right at all. Alright, we're just logging in. Today is February 28th, and it's a little bit past 9 o'clock, so I'm running a little bit late today. Had a few things I had to take care of, so let's see how we're looking today. Let's get out of here. Now, last week we did 14 positions, and this week it looks like we've only got 6 positions so far. Why that is, I'm not really sure. Maybe we didn't have enough stocks to look at. Yesterday we looked at a whole bunch. We did a lot of positions yesterday, only 6 to be exact. So we have a few more to do today, so we're going to be taking a look at something to do today. So let's quickly take a look at the market and find out what's going on. Today's being the 18th. the 28th. There's 15 companies paying out a dividend today. So if you wanted to get into any of these, you'd have to have bought them yesterday or the day before. So we can look at what's coming for tomorrow, or tomorrow we can look at March 2nd, which is 40 companies, and Friday there's 16. So if we want to look at something that we can do tomorrow, we're going to look at these 40 here. Let's see if we know any of them off the top of our head. Oh, there's Nike. We know them. You know what? Let's just go down the list. Allison, never heard of them. Never heard of TK. No. BE Aerospace. Never. Wow. Let's not show all. Let's show just the dividends. 40. BF. That is Brown Forman. Okay, that's Brown Forman also. That's Group B, yeah. Okay, I gotta learn how to do this. Big Five Sporting Goods. Never heard of them. Big Five Sporting Goods. BLK, BlackRock. Ooh. $2.50. That's a nice big dividend. What are they all about? Anyway, let's take a look at some of these. CATO, the Cato Corporation. MCS, Marcus Corporation. Lazy Boy. Lindell Basel Industries, 85 cents, not bad. Okay, LCI Industries, never heard of them. Hercules Capital, never heard of them, paying out a 31-cent dividend. Hecla Mining Company, okay. Hartford Financial Services Group, paying out 23-cent dividend. Oh, Hancock Holding. Gaslog Limited. Frank's International. There you go, Frank's International. I should probably use that as an example. Hey, we could always buy stock of Frank's International. Hey, Frank. Okay. ETN is the Eaton Corporation. Ensco. Never heard of Ensco. Deltic Timber. Calgon Carbon Corporation. Interesting. Okay. LYB is Lidebel Basel. Some of these companies, Lazy Boy, we already did Lazy Boy, didn't we? NOC, Northrop Grumman. Ooh, Northrop Grumman, that's a big defense contractor. Let's take a look at the defense contractor, NOC. Well, yeah, Trump got into office, so they've been up since the beginning of the year. All right. Grumman, Northern Grumman, is $193 about 12 months ago. Drops to make a low of 186. Then from there, she shoots up to 216. You can go sideways for about 5-6 months. And then towards the end of September, or end of October, sorry, she gaps up from 219 up to 226. Goes sideways for about a month and lands around 230. Then that is too cool. Let's take a quick look at this one. Look at this gap up here. What is November 8th? Election day. Day after election. This thing jumped from 230 and goes to 243. That's a $13 move overnight. Wow. Goes sideways for a bit, takes a big drop back down to 231, goes sideways for a bit more, and here we are at the beginning of February. It does nothing but go up to settle in at 247, where she is right now. Okay, so Northern Grumman looks pretty good for a dividend, but let's see what kind of options we have for NOC. All right, she settled at 247. Okay, so the 245, that's only a $2.50 move for $2.12. That's a lot of money for a very short payout, so that don't look very good. 47.50. Oh, this thing has weekly options on it. My goodness, why isn't it? I've never seen NOC in the weekly options before. Interesting. Okay, so it's $1.45. Huh. Wow. So if we just get 10 of these, what are we looking at? It's going to cost $1,480. My maximum profit I'm going to be able to get is $1,050, which is 35%. So 35% for 3 days, and this thing would have to stay above 47.50. Right now she's at 47.09, so no, I'm going to pass on that one. I don't like $200 stocks to begin with, number one. And number two, I don't make money unless it moves up. See, if it stays the same, I lose. If it goes down, I lose. And if it goes up, it has to go above 250 for me to actually make money. So no, I like it the other way around, where it doesn't have to go anywhere and I still make money. So this is a no. I'm going to say no to them. Okay, what else are we looking at? Now, if we're looking for options, we might as well be looking at Friday. Here we go. And then let's look at weeklies on Friday. Now, who's doing a weekly on Friday? So let's go here and let's see if anyone. No one's doing a weekly on Friday. Oh, no, that's always interesting. So it means if we wanted to do a weekly for this week, to make any money this week, we'd have to do that. No, we can do Nike. No, because we couldn't, because this option expires on Friday. However, the dividend is on Thursday. So if we want to do a weekly this week, we have to look at next week, which is the week of the 20th. And there's no one? There we go. All right, so next Wednesday, what do we got? Hershey. We already did make some money off of Hershey. So it looks at CMI. CMI. Okay, that looks interesting. Let's go look at the other one. Let's look at Fox. Now, if you're part of the the membership group, you probably see this. This is something that's mailed to you every week. First thing on Mondays. Monday morning, it gives you the top picks for the dividend capturing. And if I want to add options to this, I simply look and see who has options coming available. So here's my weekly options right here. I believe we already did these yesterday, so we're not looking at those. And I believe we did most of these yesterday also. So today, we should be looking at someone on this list. Ooh, Fox and Tupperware. Let's take a look at Fox and Tupperware, see what they look like. Fox, Tupperware. Okay, let's look at Tupperware. Tupperware started out the year last year at 50.12. Okay, shoots from 50.12 right on up. Hit 62, drops back down, hit 53, shoots back up, hit 59, drops back down, hit 50, jumps back up, hit 60, then hits the high for the year of 66, drops back down at the end of the year, the end of December at 52.77. And from there, she goes on up to settle where she is now, right in the 60 area. Now, Tupperware's got the dividend coming in next week. What day was it exactly? Oh, then not a weekly, though. We should probably concentrate on these guys here rather than try to look at that stuff. Anyway, let's find out something good right now that we can do tomorrow morning. Okay? So, let's take a look at these 7 here. CMI, we just looked at them. CMI. Okay. CMI starts the year at 99, 98, somewhere there, and it just makes a nice continuous move from 99. She hits a high of the year of 154.66, drops back down to settle where she is right now at 148. Okay, so there's room to hit the dividend that we're looking at because we're only looking at $1 dividend. So 148, the high is at 154. So we can make that dollar pretty easy, I think. So let's take a quick look. Put CMI in there. Get rid of that. All right, CMI got 3 days left. She's at 148. Okay, that looks pretty good. Oh, 69, that looks good. I think 69 cents, so we're going to be buying that at the 147, 148. So as long as this thing stays, excuse me, above 148, we're going to make, let's see, it's costing us 1,440. The most we can make out of this is 620, which is less than half. It's like a 40%, 45%, somewhere in that area. Okay, so for 3 days, I can do that. All right, so we're going to do that. What else are we looking at? DAL. Let's put DAL in there. Delta Airlines. Is that right? Delta Airlines, yeah. All right, Delta Airlines started the year last year right around 48. Went sideways for a couple months. Slow dip down to 32 to be the bottom for the year. Came back up to a trading range of 37 before she shoots up into a new trading range of 49 area. which is where she is now. So she says ups and downs right in the $49 area, which is a nice area to be in. DAL. All right, so she's at $49.93. Now we could do the 49.50, 49 and a half, 50, which is a nice spread, only 7 cents off, but we'd have to count on it going up. This one, you get 36 cents, and we're quite the ways into the money on this one. So this one looks good, so we're going to do 20 of these. Now, it's costing us $780. And we're only getting $280 out of that, so that's like a 30%. So 30% for 3 days, I can do it. So let's give that a try. All right, so we did DAL. All right, GSK. Let's take a quick look at GSK. GSK. GlaxoSmithKline. I've heard of them. All right. She starts out the year at 38. Sideways for a bit. Shoots on up to hit 43. Goes sideways for another little bit with a little bit of profit taken here and there. She makes it high middle of the year at 45. Drops back down to that trading range again at 43. Then she comes down to make the year low of 37. Towards the end of the year, she starts out 38. Now she's at 41, which looks like a nice little range at the moment with a nice 5 or 6 day uptrend. That looks pretty good. Can we do it for another week? Don't know. How much are we looking for? GSK is only looking for 57 cents. 57 cents is going to bring us up to 42. Right in that area. All right, so let's see where we are. GSK. GSK. And here we go. 41 and a half. 41 and a half is at 42. See that? The 41 and a half. Now we're at 41.48, so we still have to count on the stock going up. So if it goes up, stays the same, we're losing money. Sorry. This one I don't like because we're only looking at 8 cents. 8 cents is not a lot of money to put at risk for that, so we're going to say no to them. Now let's go back. HSBC. HSBC. Wow. Okay. I don't like this one right off the bat. I'll tell you why. Look at all the gaps. Okay? Gap, a gap, gap, another 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 gap. There's just way too many of them. So I'm going to say no thank you without even looking at the rest of them. Because look at gaps in here, gaps in here, gaps in here. Things all over the place. Okay, let's see what HSBC looks like. HSBC. She's at 40.30. $38, we're looking at 12 cents. You know what? I don't like all the gaps all over the place, so I'm going to say no. You know, because it's too much uncertainty, not enough certainty. So I'm going to say no. Let's just get out of here. And look at the big gap between this 40.08 and that's like a 42-cent spread. That's a big spread. All right, so getting out of that one. Stick to my guns. Hershey did. We made a bunch of money off of Hershey already this year. It's just why. So let's take a look at it again and see if there's another play to be made. And she continued to move up. All right, she got this big, huge gap down here towards the middle of the year, but let's go through the whole thing so people following along will understand what we're talking about. All right, she starts out the year at $90. Goes sideways for about 2 or 3 months. And she spikes up right in here right around the first end of June, beginning of July. She spikes up, goes sideways for about a month and a half, and then she makes this huge drop from 110 down to 99. That's a 10% drop. Okay, goes sideways for a bit. Now it's just a nice steady uptrend. She's settling in at around 108, and I like Hershey. So let's look at Hershey, HSY. Let's get rid of this one. All right, 3 days, 108, 107, 108. Let's see what that one looks like. That can't be right. 107, 108. All right, take a look at this. All right, let's see if you can understand this for a second. The 107, 108 is a dollar spread, okay? And they want to charge you 55 cents for a dollar spread, which means there's 45 cents left on the table. She's already at 108.35, and she's in an upward trend, and the dividend's coming out next week. Okay, this is almost a 50% return. So let's see what 20 contracts is going to cost us. 1,160. Most we can make is 900. That's right around 45%. That is a definite yes. And we love Hershey. Would I buy owning Hershey for the next 3 days? No, because next week they have the dividend coming out. And the dividend usually makes the price go up. And if it doesn't, the stock price doesn't go up anyway because Hershey is a great company. All right. Off to the races. Yay. All right. So Hershey is up there. What else are we looking at? All right. We just looked at Hershey, MAR. Who is MAR? MAR is Marriott International. All right. Well, here we go for the Marriott. Marriott starts the year last year at 68.48. Goes sideways for the whole year right up into the beginning of November. Then right around election time, she goes from 68 all the way up to 84, and she's settling in at 86.99 where she is today. All right, so let's take a look at what Marriott is going to offer us. Oh. Is going to offer us for a return. Okay, she's at 86.99. 86.99, which is right here, and oh, that's a good one too. She's at 86.99, and the 86.50s, which is 49 cents into the money. This thing has to drop 50 cents to lose. I mean, it's the Marriott. They have a dividend coming up in 10 days, less than 10 days. So this is a definite yes. Let's just go for, what's the price on this one? This one's 86, so let's just do 20 contracts in this one. And off to the races. There we go. Oh, I forgot how much that was. All right, for the fun of it, let's find out again. Okay, let's do that. Let's go here. All right, so it's cost us $390, make it $140. Okay, that's around 40%. All right, I can deal with 40%. 40% is not bad. All right, that was the Marriott. So who's next after the Marriott? NVDA. Who is NVDA? Okay, I can't even pronounce that one. NVI, Nivdia? Nivdia Corporation. Okay, whatever. Okay, so the Nivdia Corporation starts out last year at 32. This is nuts. Goes from 32, slight upturn for a couple of months. Gets into a groove right towards May and just slowly goes up. Not much profit taking either, but just consistently going up. And then right here, right around election time, she goes from 70 up to 83. That's a $13 jump in a day. Okay, so from November 8th, continuing going up, hits a high of 120 and goes sideways with a little bit of profit taken to end us up at 101.48 where we are right now. Now, NVDA's got a dividend coming up and she has nice growth. This could be a double bottom here. She could shoot back up to the resistance of 101 or 120. So this here chart looks good. So let's see what the numbers look like Let's go NVDA. NVDA. NVIDIA. Never heard of them. Okay, so at 101.50. So we could do the 101, 102. Nope, because then I have to go over to 102 before we actually see anything. So the 100, 101 is a 63. All right. Let me explain briefly. The 100 means we're going to buy the 100 and going to sell the 101s. Okay, so if the stock drops below 101, we have to buy it. Okay? But she's at 101.48, so she's going to have to drop quite a bit. Because yesterday she had a down day, or I should say today she had a down day, so most likely tomorrow should have an up day, only because you have profit taking here. Okay, not much of a profit here. Not much profit taking here because you're way below here. So why is it here? Most likely she's testing that double bottom or that support, whatever you want to call it. And she's got the dividend coming up in the next week. So most likely she's going to either stay the same or go up a little bit. So we're betting on that it's going to stay the same or go up. So we have three ways of making money in this one. If it goes up, we make money. If it stays the same, we make money. And if it goes down a little bit, we're still going to make money. It's going to have to go down 48, 49 cents before we start losing. So I'm betting that we're probably going to be in good shape. So let's do 20 contracts of this one. And we're looking at 1,320. And maximum we can make is 740, which is more than 50%. So this one is an actual, if we get filled on this one tomorrow, an actual 50% return in 3 days. Okay, that's wonderful. That's nuts. Okay, so let's see how we do on that one tomorrow. And I think we got one more. Oh, we did MBDA. So we have these guys here. CC. Okay, so CC starts out last year at $5.16. Slight little uptrend and sideways move for about 5 months. Brings us up to $9. That's almost a 50%, almost 100% return in about 5 months. Okay, from July, she's at $9. Okay, by January 1st, she's at 26. So she starts the year off at 5. Now she's at 26. That's 500% increase. Okay, you're definitely going to have profit taking at the end of the year, which is what they did. Now at the end of the year, she's going into the new year, and at the beginning of January at 21. So from 21, the beginning of February, she's at 27. She gaps up to 32, and she's settling in at 33 where we are today. Looking for a 3-cent dividend, and I'm going to say no thanks. I'm not chasing 3 cents. They did all that work. A $5 stock, now she's at 33. That's almost a 600% increase. Okay, well, a 600% increase from the beginning of last year. So where's this thing going to go? What did they do? I don't know, don't care, but I'm not going to chase no 3-cent dividend. Sorry, I should have looked at that earlier, so I'm apologizing again. If the dividend is not worth chasing, don't bother with it. Could it be a good company to invest in and hold on to for the long term? Yeah, but do you really want to chase, 3 cents dividend? I sure don't. We're looking at GE now. General Electric. Everybody knows them. And look at this. This is what we call a channeling stock. Not a great channeling stock, but still a channeling stock. Starts out the year at 29, jumps up to 31, drops back down to 29, jumps up to 31, drops back down to 29, jumps up past 31 and hits 32, okay, drops back down, hits 29, okay, and then she continues down to hit 28. And then she shoots back up again to 32, drops back down to 29. Now she's going sideways and she's at 29 again. What does that mean? It's 29. It means you buy it. If you're a channel buyer, you stick to the channel buy. You buy at 29, you sell at 31. Buy at 29, sell at 31. What are we going to do? We're going to buy the weekly option at 29. and sell it at 31. Anyway, we got 3 days. Let's see what General Electric is offering. They also have the dividend coming up in the week. GE, here we go. Okay, 29.81. So you want the 29s and a halves, and it don't look very promising. 47, it's worth 3 cents. I'm gonna have to say no on this one. All right, now if you're a really gambler, you can go for this one. 29, which leave 30 cents, which is more than a 50% return, I think. Yeah, close to a 50% return, but the stock has to move up in order for you to make money. Okay, because right now it's at 29.81, and if you buy this, you don't make any money until it goes over 30. Okay, so it has to go up. So I'm going to say no to this. I'm going to pass because the one further down, this one here, it's not worth the money. Okay, so sorry, General Electric. Okay, MPEL. I don't know, 9 cents. Do we really want to chase 9 cents? Well, it depends how expensive the stock is. It's a $16 stock. All right, I want to stick to my rules. I'm not going to chase a 9 cent stock, 9 cent dividend. All right, we're going to go NUS. Nu Skin. Oh, we know who Nu Skin is. There's that skincare product that they came out with, I think back in the 80s, I think they came that out with. Anyway, all right, Nu Skin starts the year off at 30 bucks. A nice continuing up move to 39 at the beginning of April, goes sideways for about a month and a half, and she shoots up to make a high right in the beginning of October. Okay, we have a lot of profit taking, where she ends the year at 48 and goes sideways for a bit to land us to where we are today at 49. Now look here, a couple of days ago, actually last week sometime, she hit 55.18 was the high for the year, and then she makes a huge drop down. A huge drop down. She closed at 55.14. The next day, she opens at 52.20. Why? Okay, she opens at 52.20, but drops and ends up closing at 48. So that's a big drop from 55 to 48 in one day. All right, so that's where she is now, going sideways, settling at 49. So let's see if they're offering us anything to jump into Nu Skin, NUS. All right, NUS, like I said, is at 49.54. Take a look at the 49.50s. 30, which is 20 cents. Okay, that's not bad. I can do it 20 cents. And we like Nu Skin, household name for a large portion of the country. All right, what I really like about this, here we go. All right, it's cost me $660, and I'm making $400 off of that. Okay, that's more than a 50% return for 3 days. Now, Nu Skin has a nice dividend, so let's try it out. All right. MPEL, we're not looking at that one, and 12 of them for Friday. Do I want to look at all 12 of these? I've got $88,000 left to go, so let's see what I'm looking at. 1, 2, 3, 4, 5, 6. Well, I got all these positions I got open. All right. Let's go this way. Awful lot. Johnson & Johnson, Dividend King. Let's do them. See what the Dividend King has to offer. J&J. Open that. Johnson & Johnson starts the year at 105. Nice uptrend from the low of the year at 105 to go to the high for the year 5 months later at 126. And from 126, a slow decline all the way to the beginning of December at 109. Goes sideways for a little bit, and for some strange reason, the beginning of February, this thing shoots up from 113 to 122. What's that all about? So she's at 122 now. And this looks like 1 to almost 3 weeks of up days. So I don't like to go against the trend, really don't. But all that profit from 113 to 122, that's $11 in profit. That's a 10% profit in 3 weeks. You know there's what do you call it? You know there's profit taking coming. So if I was a real gambling man, I'd start buying some 114 puts. Which, you know what? Just for the fun of it, let's buy some. Let's buy some 114 puts for J and J and J. Let's get out of the verticals, do the singles. And we want, not for this week though, because that's 3 days. I'm not counting on this thing dropping in 3 days. Let's go for next week. And let's see if we come to 114s now. Okay, let's get out of there. And here we go, 114s. Here they are right here for 6 cents. Wow. All right, for that, I'm going to want to see the delta. Okay, so let's change this. Here we go, the delta. Okay, so if I'm looking at the 114, delta's a -3. Okay, do we know what that means? That means for every dollar it goes down, the option goes down 3 cents. So if I'm buying it for 6 cents, and this thing drops $1 or drops $2, then I double my money. Okay, you see, it's 3 cents, -3. So for every time the stock goes down $1, my options are going to increase by 3 cents. Now, I'm only paying 6 cents for it, so 3 cents is 50% of the 6. So for every dollar it goes down, I'm making a 50% return on my money. Interesting. Okay. Let's make this interesting. 50 of them. All right, so it's gonna cost me $375. All right, well, $375. Let's see what happens. Okay, there she is. It may get filled, it may not, but the way I look at it, Johnson & Johnson's a great company, right? It's been around for over 100 years. It's a dividend king. They've been increasing their dividend payments every year for 50 years, or more than 50 years. They've been offering dividends since the 1800s. It's just unheard of. It's crazy. But, all right, people are greedy. You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 up days in a row. Look at it. It goes from 113 to 122, almost 123. That's a $10 move. There's got to be profit taking in the next few days. And when it does, it's usually going to retrace about 50%. So from here, 50% of that is $5. That'd be about 117. Probably race rate, which is right where the support was before. So it blew through the support around 117, retraced back 50% of its move, which will bring us back to 117. So when it drops a couple of bucks, I'll double my money and I'll just jump on out of there. I don't have any target in mind. I just want to make a little money, I guess. Sorry, but that goes against what I'm trying to teach now, doesn't it? investing in dividend stocks to make the dividends payments, and here I am going against what I'm saying. All right. It's just an option, guys. Okay, you don't have to do it. I'm not suggesting. I'm usually doing this for investing purposes. You buy the stock, collect the dividend, and jump back out again. And the dividend has something to do with stock moving up. But this is just like a freak of nature. It's there, and I've been trading for over 20 years, and it makes sense. You have all this growth. Okay. At the high of the year was for 125. Now she's at 122. And look at that. This thing's just poised. It's just set up for profit taking sometime this week. So we'll take a look at that. All right, what else are we looking at? We looked at Johnson & Johnson. AGN. Who's AGN? AGN. AGN starts out the year at $294. We're going to say no already because I don't like doing stocks over $200. And this is in a downward trend. Don't like that either. Starts the year at $294. Goes over sideways, a little bit of a drop for 2 months. Then makes a big drop from $267 down to $234. That's a $30 drop. Sideways for a bit. Comes back up at $250 right around July, August, and then slowly down to the end of the year, where it makes its low of $184. Comes back up and settling at $244 at the moment. She's looking for a 70-cent dividend on a $240 stock. All right, I'm going to say no right there. I don't want to do it. $240. Number one, I don't like stocks over $200 because it limits how many I can buy. And number two, the dividend is so small, it's not worth my effort. Okay, so we're going to pass on AGN. UNP. Union Pacific Corporation. Is that the railroad? Union Pacific? Okay, they get a nice looking chart. Look, a lot of ups, a lot of profit taking, a lot of ups, a lot of profit taking, a lot of ups, a lot of profit taking. It's a nice classic moving stock. Okay. Starts out the year at 79, jumps up to 84, drops down to 77, jumps up to 88, drops down to 84, jumps up to 89, drops down to 82. Nice movement all year long, but a slow increase, making to the high of the year at the end of January. And from there, she goes sideways to settle into where we are now at 107.94. And we're only looking for 60 cents for a $100 stock. Okay, so what are we looking at? UNP. All right, I don't need all of them. I only need about 8. And we're looking for our spreads. Okay, so 107. 66, we're looking for 33. That could give us a 25% return. Okay, she's 94 cents in. This is a definite no-brainer. Let's do this one. The reason I say definite no-brainer is because number one, she's a $100 stock. Number two, she's been going sideways for 2 months in this range, and she's at 107.94. Okay, this thing has to stay above 107 for us to be in profit. For us to make our 30. Let's find out exactly how much we're going to make on this one. Well, just a little shy of 50%. So we're looking at 40-45% for this one. Okay, so we can get 40 to 45% if this stock stays the same, goes up, or even comes down 94 cents. Come on, 35-40% or 40-45%. Definite no-brainer for me. Thank you, Union Pacific. All right. That was Union Pacific. UNP TSO. 55 cents per TSO. TSO is Tesoro Corporation. Never heard of them. What do they do? But look at that chart. That is awesome. Nice sideways going chart. Okay, starts out the year at 80, shoots up a month later, hits 93, drops back down to 80, shoots up, hits 87, drops back down to 75, shoots up. Nice movement. Nice movement all year long. Hits a high in end of March at 93. Hits the low of the year right in July, mid-July. Goes sideways for a couple of months. And then from August, she goes up to the next high, almost hitting the same high of the year at 93. All right, and she's settling in. Let's go back to where we are. She's settling in at around 85, where she is now 85.19. Let's take a look at that. I have a sneaky suspicion they're going to give us a good return on this one. All right, TSO. 85. Ooh, this one is a good one. Okay, the 84.5, 85. See right that? We're going to buy the 84.5 and we're going to sell the 85s. Okay, so we're looking to make that 50 cents between 84.5 and 85. As long as this thing stays above 85. Now look at this. She dropped for some strange reason. Now, if that's bad news, that's not good. However, I don't mind owning the railroad. So let's just get us 20 contracts of these. Okay, because we're looking to buy this because we want to collect that dividend. And 82 or 80, 85, yeah, 85 we're looking at. As long as she stays above 85, we're going to be making that. Okay, so it's costing us 600. See, 540 plus a 60 for the commissions makes us 600 bucks. That's what we're paying. The most we're going to make if this thing stays above 85 is 460 bucks. That is more than 50%. That's 60. Oh, that's a good one. Over 60%. All right, 60% for 3 days. I like that. All right. All right, folks, that's just about enough for now. I mean, you basically see what I'm doing. I'm just going in, finding out who's paying the weekly options that are coming up. TAP, who's that? Oh, Molson Coors Brewing. I don't know. All right, well, you guys can check that one out yourselves. Molson, Time Warner, that's a good company. Hollyfield Frontier Corporation, that's a good one. AGNC, who's that? AGNC Investment Corporation, okay. GLW, Corning. Oh, Corning, we all heard of Corning. I just didn't know it was GLW. Cody is Cody Incorporated, never heard of them. Key is Key Corporation. ABX is Barrick Gold Corp. Okay, well, there's your options for the weekly for stock dividend stocks offering weekly options for the upcoming next week, which you can do tomorrow, the next day, or the next day. Okay, anytime, because these expire not this Friday, but next Friday. All right, so they're not going to clear off our account. See, this is all the positions we have today. We did quite a bit of them. Okay, quite a bit of them we have here. More than 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. All right, so we got 15 positions. All right, now some of these, not all of these are going to fill tomorrow. I mean, yeah, we'd like to see them, but there's no guarantee it's going to work. So first thing tomorrow morning, they're either going to get filled or they're not going to get filled. Okay, figure this all out. Just, get the books, read through the books, review some of the videos that we've done. I mean, as a member, you get all the books and you get access to all the software that tells you which ones are the best ones to do. This is just a quick little exercise on how to do them for the weekly options. And I will be checking you guys on Thursday.